JJ the CPA here. Hope you're doing well. I just want to give some top tips to S-Corp owners. And here's what it comes down to is that when you're filing a separate tax return, you're a separate entity. And the benefits of having an S-Corp is that net income by statute is not subject to self-employment taxes. Self-employment taxes is an additional 15.3% tax down at the individual level that's in addition to your income taxes. But we know that when you're filing an S-Corp, the IRS also knows this. So what's really key here is to ensure that you're paying yourself reasonable compensation. What's reasonable compensation? Well, that's a tricky one because every business is different. Cash flow is different in every single business, and it depends on whether or not you have other people working for you. So the first thing I do when I'm talking with my clients is we first determine, well, what is it that you are netting and expect to net, as in terms of your income, and how much money do you actually have to pull out? Because, when businesses are first starting, they may not have any money, or they're just borrowing money to get things off the ground. IRS can't require you to pay yourself a wage if you don't have any money to do it or you're running a loss. And no, I'm not telling you to read between the lines and somehow with a smirk say, oh, are you saying I don't need to pay myself wages? No, what I'm saying is business economics, reasonableness comes into play in determining this. So if somebody's saying S-Corp requires wages no matter what, it just depends on then the next thing, which is what is your time and effort in the S-Corp. So again, I'm not giving you things to read between the lines. I'm not smirking with you. I'm not giving you anything to try and get away with anything. So with that being said is I do have clients and they have an S corporation, and some, their minds are going to be blown right now and I'm probably going to pop off. So I'll give you a second to go ahead and pick it up off the floor after I say this. But I have clients that own S corps and they don't pay themselves any wages. All right, you got your head back on? Here's the bottom line on that. They don't participate in any way, shape, or form in the S corp. And this S-Corp with its activity doesn't require them to have any effort. And this is an S-Corp that has losses and or when it has income, it's really phantom. So they're not even really probably pulling out distributions all that often. With that being said, even if the IRS were to come and ask about these circumstances, okay, that's like a referee wanting to make a call on a play. I would say they have no effort into it. This isn't a type of entity that's generating any kind of income on a routine basis. It's requiring any effort. There's not that much money to pull out, or it's not that often. So with that being said, I'm just giving you an example of when wages wouldn't be required. But see, I want you to hear it the other way. Most small businesses, that owner, they're involved in the business. Their effort, their time, the sweat of their brow, they're involved in that business. So when we're talking about the economics of this, what we're talking about is back to, well, how much money are you pulling out? How much money is it that you actually have? And from that standpoint, there are some rules of thumb, but see, that's all they really are. And many would say up to maybe the first 100,000 be 60-40, maybe 60,000. For wages, 40,000 for distribution. But see, that's not just a hard and fast anything because the IRS, they just want to look at the facts and circumstances. I'm just giving you a guide. With that being said, I have clients that if they're the only one that's doing anything in that S corporation, well, then it probably warrants that their wages be a little higher, even though they're netting 100 grand. Now, somebody that has maybe a little more effort, but not a ton, well, maybe their income on wages would need to be 24 grand. See, it's going to come down to effort and affordability and how much money is actually being pulled out for that owner. The other aspect is that the less you pay, the less that you have wages subject to Social Security and Medicare taxes. And I know many, and not going to be cynical about it, but many say, well, do I need to pay into that? Will there be Social Security later? Probably. But with that, I want you to note that you can go to ssa.gov and go right into your account after setting it up and see what you would qualify for based on what you've paid in right now. I don't know if you're aware of this, but there is a maximum that you can collect from Social Security. So you want to make sure that you're paying in a reasonable amount for your wages. Then you have something going towards Social Security, Medicare. But at the same time, you don't want to go too far above what it is that you would need to pay in if you're already going to be hitting the max. Now, in Social Security benefits, it's based on 30 years. So if you're at the tail end of your time before retirement or you're at the beginning, well, there's a factor there as well. Now, the biggest thing that I tell my clients when we're talking about the reasonable compensation versus the distribution. So what's a distribution? Distribution is you pulling money out that's not a wage. How do you do that? Just writing a check to yourself and you pay yourself. What is that? Well, it represents the profit of the business. It's a distribution of assets. Now, it's not a dividend because a dividend is taxable to the recipient where a distribution is not. But see, here's the key. Whatever that business nets, this S corporation, the individual owner is going to pay tax on that. So with that being said, the distributions simply represent that net profit. Now, if that net profit is 50 grand and that owner pulled nothing out for themselves, you know what they're going to pay tax on? 50 grand, that net income. But that means that in the future, because they already paid tax on this 50 grand, they would be able to pull money out of the S corporation because it would represent profits that were already taxed. This is just how it works in an S corporation. So no one avoided any tax. Tax got paid. It was just one time when the profit was earned. So with that being said, distributions don't have to be something that's maxed out year end. How much cash you have in your S corp does not affect what it is that you're going to pay tax on. But what I tell my clients with distributions is we definitely need those to be more representation of paying out net profits. So that doesn't mean every Wednesday or on the first of the month or whenever they feel like it or when they need extra money that you pull out a distribution. No. What it means is, what would a business be normally doing if you weren't the one that had the checkbook at your disposal and they're paying out profits? Well, it's probably monthly, probably wouldn't be any more than that, and probably quarterly. So most of my clients, probably 90% of them, they pay out distributions maybe only 4 times a year on a quarterly basis. And what's important too is that you're not only paying yourself a reasonable wage, but you're paying that wage to yourself routinely and more often than how many distributions you're pulling out. So for my clients, they're either doing the 1st and 15th for payroll or every other week for the payroll. And then the distributions would be based on, well, how much money do we have left over, which is based on profitability. And if they're pulling that out quarterly or maybe 5 times a year, well, in those circumstances, this is all going to walk and talk. Now, this doesn't mean that if you net 100 grand and by the sweat of your brow, you are the only one putting effort in, that if you only pulled out distributions 4 times a year, somehow you could get away with not paying a reasonable wage. That's not what I'm saying. So there's no angle for you to find. Now, I'm just going to tell you, I'm going to be honest with you. I'm turning the comments off on this because fellow tax professionals can't seem to help themselves. I love you, fellow tax professionals. Thanks for tuning into this. But what did I just give you, everybody who's watching this? I've given you some ideas. I've given you my opinion. I've given it based on my experience. See, this is why you want to have a tax professional, not one that scares you and just says, well, the IRS is going to see that as a red flag or that's an IRS audit. No, okay? The IRS is a referee, and anybody that's telling you those kind of things, it, in my opinion, means they don't actually know what they're talking about, okay? They don't, because all they know is to scare you because they don't know how to explain it. Also, if you have somebody that is belligerent as a tax professional, as in, well, if you're netting 100 grand, you need to pay yourself 100 grand. I just say, don't hire anybody that's belligerent. What you want to have is a tax professional that's going to do what? They're going to look at your facts and circumstance. They're going to look at your cash flow, look at your profitability, and help you come up with a reasonable compensation amount that is then your W-2. And biggest reason to ensure that you give a best shot at this, and reasonable being the key word, is that whatever you're not paying yourself a wage, then that net income after the deduction of your wage is not subject to self-employment taxes. It's not subject to the 15.3% tax, like if you were active in a partnership or like if you had a Schedule C. So there's a saying here in Oklahoma, probably many other places, right? Pigs get fed and hogs get slaughtered. Here's the bottom line. Come up with something reasonable, how you came up with it, reevaluate, do payroll often, routinely, do distributions, not that frequently, distributions being representative of your profits. And if you would buy what it is that you're serving, then most likely the IRS will too, because we know this, right? You may be able to pull the wool over a lot of people's eyes, but we can never pull the wool over our own eyes. So if you think it's reasonable compensation right here, then most likely it is. And if you find yourself going, well, what if I did this? And what if I did that? And you find yourself smirking, right? That probably means you're going in a direction that's not reasonable. All right, so sorry I had to turn the comments off, but for whatever reason, when I do S-Corp videos, I get a lot of negative comments, and really from, unfortunately, fellow tax professionals. So I'm turning you off. All right, hey, thanks for tuning in. I'd love it if you'd subscribe. Check out my other videos. I've got a playlist. Check out other things related to this. And then don't you ever forget, you've never met a CPA quite like me. Have a great one.